Ladies and gentlemen, good day and welcome to the Goldiam International Limited Q2 and H1FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ashish Pansali, Executive Chairman, Goldiam International Limited. Thank you, and over to you, sir.
Thank you very much. Hello, everyone. We welcome and thank you all for taking your time out this afternoon to have a brief interaction with us. I hope you all had a chance to go through Goldiam International's Q2 and H1FY22 investor presentation and results press release uploaded on our website and exchanges. To give you an update on the same, Goldiam International reported its highest ever half-yearly sales in H1FY22. The company has witnessed a strong uptick in its revenues along with margin expansion in its lab-grown diamond jewelry and natural diamond jewelry businesses. Fueled by the revival of US retail and an increase in consumer spending. During H1FY22, Goldiam's consolidated revenue grew by 169% YOY to INR 3,299 million, owing to reopening of US markets, government stimulus, and aggressive COVID-19 vaccination drives, resulting in a strong uptick in US jewelry demand from retailers and end customers. Our consolidated EBITDA surged by 210% YOY to INR 639 million in H1 FY22. Goldiam's EBITDA margins expanded by 210 bps YOY to 19.4% due to better operating leverage and enhanced product mix. The company could garner higher margins during H1 FY22 owing to its strategy of selling lab-grown diamond jewelry backed by captive lab-grown diamond manufacturing presence across the value chain, coupled with a robust omni-channel sales presence. As on the current date, the company's order book stands at 250 crores. Recently, the company had bagged export confirmed orders worth rupees 50 crores from its international clients. The order includes 40 crores of manufacturing of diamond-studded gold jewelry and 10 crores order for larger carat lab-grown diamond jewelry. E-commerce sales, given its nature of being booked online on a spot basis, is not part of this order book. Now coming towards the balance sheet, Goldiam enjoys a net debt-free status as on H1 FY22. The company's cash and cash equivalent and investments stood at 2,462 million as on the same time frame. The company would continue to explore various opportunities to judicially utilize the cash reserves, including reinvestments in our core business, as well as potential inorganic growth opportunities. Goldiam's strong balance sheet boasts return ratios ROCE and BOE and ROE annualized of 47.2% and 17.5% respectively, dramatically higher than previous years thanks to our reinvestment efforts in the business of diamond-studded jewelry exports. For the benefit of investors and analysts who are listening to us for the first time, we would give brief color of our business model. Goldiam is among a premier OEM for fine jewelry, manufacturing, wholesale and distribution to large jewelry wholesalers and retailers. Our customer base is predominantly in the United States of America, with exposure to a majority of the largest jewelry specialty store, bulk box retailers, department stores, and more recently online-only retailers. We develop new styles completely in-house with a strong and global design team with nil trading activity, allowing us to fetch higher realizations and margins on our sales. We have two lines of offerings as our product portfolio. First being natural diamond jewelry and the second one lab-grown diamond jewelry. We would touch upon briefly on these two product portfolios. Speaking about natural diamond jewelry, this has been a traditional business which comprises close to 85% of our total revenues as on date. The business has an EBITDA margin close to 18 to 20%. Going forward to lab-grown diamond jewelry, we are first and the only jewelry exporting company to operate across the entire lab-grown supply chain to grow, manufacture, distribute lab-grown diamonds and jewelry. With a strategic acquisition of eco-friendly diamond, EDL gives us access to the supply of key raw material of manufacturing and growing lab-grown diamonds. The company owns 88% stake in Eco-Friendly Diamond LLP. On the lab-grown diamond front, the company has reached the highest realization for a diamond grown due to enhanced technologies. Due to the seasonal nature of our business, as an exporting firm focused on serving US retail, our business must be looked at on a year-on-year basis only. Q3 has historically and remains to be Goldiam's strongest quarter due to the major shopping season of Thanksgiving and Christmas, with other quarters consisting of regular retail activity including destocking, new style testing and reorders. We will take some more time to further explain our sales channel, which we follow to execute our orders. Our traditional brick and mortar business firms up for around 80% of total sales, with the differentiating factor being online e-commerce mode of sales channel, which constitute close to 20% of overall sales versus 5 to 10% in the industry. The difference between industry average and Goldiam's e-commerce business shows how we have been early and invested deeply in the growing sales channel. Along with the appeal, online sales are ROE lucrative. It helps us to have better inventory turns and significantly reduced debtor days, thus leading to a shorter working capital cycle. In fact, this part of our business, which is now a sizable component, is running at a negative working capital basis, yielding superior returns to our shareholders. Goldiam has a dividend distribution policy of distributing a minimum of 50% of standalone profits. Over the last 5 years, Goldiam has carried out 2 buybacks of shares to the tune of 30 crores. During the last 5 years, which is FY17 to 21, Goldiam has utilized 84 crores on dividends and buybacks alone. The company has proposed a buyback of 380,000 equity shares of the company on 27th October 2021 for an aggregate amount not exceeding 456 million. The maximum buyback price is set at rupees 1,200 per equity share on the record date on a proportionate basis under the tender offer route using the stock exchange mechanism. The buyback price constitutes of 1.7% of the total paid up equity capital of the company and 19.35% of the standalone paid up equity share capital and free reserves of Goldiam as on FY21. The company expects to complete the aforesaid buyback process by the end of November. With that, we shall be happy to take any questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Yeah, thanks for the opportunity. I have 3 questions. Firstly, historically we have seen that Q3 is always a best quarter. So how do you see the trend given already we have a very good Q1 and Q2? So do you feel that still we can do best Q3 this time around?
Hi, good afternoon to you. Thank you for your question. Yes, Q3 historically has always trended to be one of our strongest quarters because the sales season of ours, which is Thanksgiving and Christmas, all happen during the same time. Even for the current Q3 that I think we are expecting a very strong quarter, and you will be pretty happy with the performance that the company will show in Q3 as well.
Okay. My second question is, compared to Q1, the margins have come down in the Q2. So any specific reason for that?
Yes, very rightly observed. the margins in Q2 have come down a little bit. The biggest reason is because of the diamond price, raw material price increase. So the raw material prices increase. We have already orders which we take in Q1, and by the time we could finish buying the raw materials, we had to pay close to 7 to 8% higher for our cost of raw material in that quarter. The same is now passed on to all the customers, and you will not have such decrease in margins.
Okay. And my last question from my side is, this time around, if we see the consolidated balance sheet, the receivables and inventory levels have increased significantly, and also there was some short-term borrowing of 58 crore, which we have seen first time in the Goldiam. So, any specific reason for such high trade receivable inventory?
Yes. So what we have done is we have invested in lot of new test styles with retailers. So being the investment of new styling, always you will see at a certain time the inventory goes up because we have invested in consigning all the new test products with the retailers, which will convert into asset post December. So that is the reason why inventory has gone up. Second thing, we also are stocking a little bit more for our .com sales, which we guarantee delivery in 6 to 7 working days. Q3 being our largest, we are getting orders close to 100 different styling, 120 different styles per day on .com. So the reason we have to, invest in inventory a little bit more, which will all be back into this original system post December. And regarding bank finance, the business has grown from 400 crores last year to 317 crores just in 6 months, right? So because of that, additional raw material, additional finance was needed to buy goods, whether gold or raw material in time. And to enhance our margins, we are also trying to buy these raw material more on a COD basis to get maximum value for shareholders, which you will see in the next quarter.
Okay. And anything particular on the receivable side? Almost 200 crore, more than a quarterly sales.
Yeah, so all the entire receivables, right, will hopefully in the next quarter, it will reduce dramatically. It's because all these goods that were exported will start converting into sales and customers will start paying us in this quarter, current quarter and next quarter.
Okay, fine. That's it from my side. Thanks.
Thank you.
Thank you. The next question is from the line of Akash Saveri from Perpetual Investment Advisors. Please go ahead.
Good afternoon, Mr. Mansali, and thank you so much for organizing an analyst Concall. Just a couple of questions from my side. If we see the employee benefit expenses, there has been some volatility, in the last 4-5 quarters. So, what is attributable to this sharp increase quarter on quarter? And also, you said not to look at your business quarter on quarter and more year on year, but just over a period of time, the volatility in the employee benefit expenses. Could you just throw some light on that?
So, Akash, I can take this. This is Anmol Bhansali here, full-time director of the company. Thanks for your question. So, looking at the employee benefit expense quarter on quarter wouldn't yield too much analysis from our point of view, because we are deferring time periods for payments of commissions to our employees both in America and the sales employees in India. So if you look at our business on a year-on-year standpoint, or overall full-year standpoint with regards specifically to line items such as employee benefits expenses, other expenses, etc., depreciation and amortization, that would yield a more clearer understanding of the question you're asking.
Got it. Thanks so much, Anmol. Anmol, another question was, if we see like brand and lab-grown diamonds as well as natural diamonds, so what will be the difference in the realizations and margins between these two product profiles that we are in?
Sure. So in a average unit selling price for natural diamonds, Goldiam has always been in the mid to higher tier segment of about $450. $400 to $450 per item sold from our factory. With the advent of lab-grown diamonds, and especially thanks to our backward integration with eco-friendly diamonds and its finished product, which is large CVD lab-grown diamonds, our average realization per product sold in lab-grown is in fact close to $900 to $1,000, depending on quarter and depending on the sales mix we have then. So it's a dramatic, rather than a decrease, it's a dramatic increase because of a much more favorable mix of products that we are placing in lab-grown diamonds. Again, this is primarily thanks to the fact that we have backward integrated with eco-friendly diamonds in order to get access to that raw material of large lab-created diamonds. With regards to the margin profile, our natural diamond jewelry business yields between 18 to 20% every year on an EBITDA basis, on an annual EBITDA basis. And on an annual EBITDA basis, we hope lab-grown jewelry business will be about 30 to 35%, depending on the mix we use of our own grown centers versus buying lab-grown diamonds from the market and utilizing it in our jewelry orders to our retail customers.
Got it. So we also buy lab-grown diamonds and not only manufacture in-house?
That's correct, Akash. So all our large lab-created diamonds are manufactured in-house by eco-friendly diamonds. That yields the most amount of margin and profitability for the company. And on the more commoditized sides of the business, which would be smaller melee diamonds or basically accessory diamonds, if you call them, those are bought from the diamond market.
Got it. And what would be like the mix? Like what percentage is in-house as compared to bought from outside?
Sure. So about I would say 20 to 25% of what we sell in lab-grown diamonds is in-house purchases, and we are constantly striving as management to increase that component moving forward as well.
Got it. And these lab-grown diamonds that we make, is it that those sizes, like the caratage, is not available in natural diamonds? Or, if you could just throw some light on that?
Absolutely. That's very correct, Akash. So within those sizes that we grow at eco-friendly diamonds, we currently, and we have in fact never at Goldiam had access to those same quality and same sized diamonds in natural, because it's usually comes, it comes only thanks to having direct purchases from the mining companies like De Beers, Alrosa, etc. So, that category of fine jewelry was always reserved to those people who have direct access to rough diamonds from these mines. If you are talking about, the same caratage, same size, same quality and natural diamonds. So, it's really an exciting journey that we are on, where we kind of, if you will, have our own mine in growing diamonds of these sizes, and we are able to then invest in and introduce new styling in this category of larger lab-created diamonds.
Got it. Thanks so much for that. The next question was, with the entire energy shortage which is happening in China, are we seeing some incremental inquiries for our lab-grown diamonds from the US or any other markets?
Yes, so there definitely is, some amount of change thanks to it. However, the product basket of what China makes and what we make here in India are very, very different. So China is largely a manufacturer for small lab-created diamonds, which is something that we do source from the open market, whereas at eco-friendly diamonds, we focus on growing large CVD diamonds, which yield the highest margin for the company per unit sold. So the product basket is different. However, yes, due to a shortage in those components, there is additional inquiries and demand coming in for eco-friendly diamonds as well.
Got it. Thanks a lot for that. And so how is the traction currently in Jewel Street? Because, with conversations with people in the industry, a lot of people are getting into a similar thing what our model is in Jewel Street. So how is the traction and how is that part of the business growing?
Sure. So we have in this quarter sort of done a tie-up with a wholesaler based in the US itself, who has a team of people on the road and salespeople on the road who will be able to distribute this website more effectively to small mom-and-pop independent jewelry retailers across the country. We see this as being extremely a fruitful development for Jewel Street, and our own investments then yielding better and faster results. we're hoping that over the medium term, over the next 1 to 2 years, we are able to set up Juicy to be 5 to 10% on the minimum side of revenues, and that will dramatically impact our ROE to the in a positive manner.
Got it. And if you just a question, how do we distinguish ourselves from our competitors? Like, is it based on the designs, or how are we better than our competitors? Is what my question is.
Sure. So there are multiple answers to this question, Akash. Let's say number one, we are a very focused jewelry exporter. So we, are extremely dominant in, for example, the engagement and bridal jewelry segment of the US, right? So we have a history of SKUs and a history of success there, which we can bank on. Number two, our .com development and presence is also extremely helpful to large retailers, because we can offer a turnkey service and tell them, we have thousands of SKUs ready, all with high-res imaging and product feed for you to beef up your website. Further, 6-day deliveries on e-commerce is also something that is not, I would say, no other company can manage to the scale that we do, and we're only being able to further grow and strengthen over there. Then another way is we've got on-time delivery on all our orders, consistently year on year, with no quality problems from our retail customers, and giving them further dependency and bankability on Goldiam. Another main factor is, for our retail customers, after disruption in our industry, they're looking for large jewelry retailers and suppliers that they can truly work with and partner with, who will be there for the long run. Thanks to our debt-free status, or net debt-free status rather, we are able to, give them consistency and sustainability, and they prefer working with us from that point of view as well. Being a publicly listed company, we are able to offer transparency and financial disclosures that none of our competition is able to offer. And then lastly, we are the only integrated manufacturer in lab-grown diamonds, right from growing diamonds to cutting lab-created diamonds to manufacturing it into jewelry of our own designs and distributing it to the end retailer. So this segment, where there are strong tailwinds for new retailers who choose to enter or expand, Goldiam offers an end-to-end service, where we can strongly differentiate from our competitors.
Thanks so much for such a detailed answer. Just last couple of questions. This is an industry question. That what is the difference between the CVD process that is generally used in India versus the HPHT process that is used in China, the high pressure, high temperature, which is, I believe, used in China. So what exactly is the difference between these two processes?
Right. HPHT used in China is a commoditized process, and it's usually industrial presses that create this. You are limited by size of diamond over there, and most often you can only do smaller size diamonds. CVD as a process is chemical vapor deposition. It most closely follows the process of diamond creation in earth, over a long period of time. That yields larger size diamonds, which are, of course, of more importance to a jewelry company like Goldiam.
Got it. And if I could ask that, what exactly would you say is our capacity utilization and overall capacity of the LGD plant currently?
We're at 100% right now, Akash. We are in discussion to further enhance capacities at our LGD plant as well, as we are seeing more and more integration between our diamonds which are grown at the LGD plant and our finished jewelry distribution to retailers. So as we are integrating the sales channels, and we are setting our own diamonds in our own jewelry and distributing it, we as management also have more confidence that this is the right time to perhaps further invest in increased capex in our LGD growing operation.
Great. Thank you so much, for answering all the questions, and all the best. And it's great to see how the company has grown in the last couple of years. And all the best. And thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your questions to two per participant. If you have a follow-up question, you may rejoin the queue. And reminder to every participant to ask a question, you may press star and one now. The next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good afternoon, sir.
Good afternoon.
Yeah, my questions are on the lab-grown diamond business. In the AGM, you had talked about that this year we might reach like 25-30 crores as a business, or 5% roughly. And what kind of growth do you think we can see for next year and next 2 years in lab-grown diamond business?
Sure. Thank you, Mr. Aman. So we are hoping to cross 70 to 75 crores in our lab-grown diamond jewelry business, where we will surely be able to create lab-grown diamonds and then make jewelry out of it to the tune of at least 70 to 75 crores in this coming FY21 to 22 financial year.
Sure, sir. And if you look at Indian lab-grown diamond sellers like Fiona and there are 1-2 more players. So are these our customers? And if yes, are we the sole supplier or at least the dominant supplier to them?
So no, Mr. Aman, we are a very export-focused company. So we sell to large retailers and corporate retailers in the US who, on the minimum side have 40 to 60 stores. So our focus is on more volume-oriented clients.
Sure, sir. And you talked about the difference in sizes compared to, say, what Chinese supply. So if you can talk in terms of, I don't know, carats or something else for us to understand what is the size you are typically selling.
Sure.
In
Sure. So everything that in terms of rough comes from Chinese suppliers is about under 3/4 or under 1 carat, and eco-friendly diamonds is focused on growing diamonds that are above 1 carat. So we are very well placed, sort of above in terms of the larger diamond jewelry, larger diamond segment.
And finally, I'll come back into the field. If you can talk about the market opportunity, as in what are the other big players in this industry supplying bigger sizes diamonds? So, and what is the addressable market size as of now in US?
So lab-grown diamonds is just really, in our opinion, starting off in terms of not just US, but its presence globally. Where I think last year there was about near about 1 to 2 billion opportunity in lab-grown diamonds as a market size. We're seeing trends that this would effectively double or at least be an extremely high single-digit growth every single year. From our perspective as a jewelry first and jewelry-oriented company, retailers and large corporate retailers are only more and more asking for lab-created diamond jewelry and inquiring further about our strategies, our abilities to deliver consistently in this product segment. So we're very bullish on lab-created diamonds, not just from the thought process of sustainability angles, but also from on-the-ground results that we are seeing from our retail customers.
Just one clarification. My question was, so out of this 1 to 2 billion, if my understanding is correct, most will be the smaller sizes, which is supplied by Chinese.
That's correct. So, Mr. Aman, regarding the breakup of larger CVD diamonds versus the smaller diamonds that are grown largely in China, we can get back to you with further details and we can route it through our IR team once we have that data on hand and ready.
Sure. Thank you. I'll get back in this.
Sure. Thank you.
Thank you. Participants, to ask a question, please press star and 1. The next question is from the line of Deepak Jindal, an individual investor. Please go ahead.
Yeah. Good afternoon, sir. Congratulations on the great set of results. My first question is around, medium to long-term view. How do you see this sales mix changing between natural versus lab-grown diamond? I think you mentioned it's 85-15 right now. So let's say, 2-3 years kind of a view, how would the mix change in favor of LGD?
Sure. Thank you for your question, sir. So we are hoping over the next 2 to 3 years, we will be at about 25 to 30% of LGD jewelry, where the balance is then natural diamond.
Okay, cool. Great to know, sir. Second thing, sir, just wanted to understand, you rightly mentioned that, your margin profile, EBITDA margin should be seen in the perspective of year on year. So initially we were around 8 to 9% EBITDA margin, and then from last 2 years we are in the range of around 18-19% EBITDA margin as well. So safe to assume that, when the sale mix change in favor of LGD, the EBITDA margin will keep on growing as well. So any mid-term kind of a view that you can have on a sustainable EBITDA margin at a yearly level?
Right. On a medium term, I believe that a sustainable EBITDA margin, once we achieve further expansion in LGD jewelry, will be close to 20 to 22%. This is on a perhaps conservative side, depending on how the market develops and what sort of opportunities we are able to bring to our manufacturing and to our shareholders. So I would say it's sustainable to assume that in the medium term the margins will be around 20 to 22% on an EBITDA level.
Okay. One last thing, sir, if I may squeeze in a bit, a mention of the operating leverage that you had mentioned in your initial commentary as well. So safe to assume that, when, let's say, our sales will be expanded, there will be some extra goodness that will come out of our operating leverage as well, and it could also...
Sorry, sir, can you repeat that question? We're unable to hear it clearly.
So in the initial commentary, there was a mention about operating leverage as well, which has helped us out to kind of gain some extra goodness. So let's say going forward as well, when the sale will be expanded, would there be an extra benefit of operating leverage that will play out?
So you will see the benefit coming in on our ROE and ROC front, where cash moves more from low-yielding liquid fund and low-yielding just cash investment further into the business, where we are able to generate, a lot higher return for our shareholders. And over the medium term, that's only beneficial, because as our new tests and our new launches with retailers get successful, get converted to asset, and get enhanced exposure on those retailers' websites as well, we will be more and more able to sustainably maintain our margins and further drive improvement in our company level ROE and ROCE.
Okay. One last clarification, sir. You mentioned a bit about price hikes as well. The raw material was a bit on the higher side. The cost was on the higher side, and you have made some price hikes as well. So safe to say that we are having a pricing power, and we can pass on the price hikes in corresponding to the raw material, even with the lag as well. But there is a way we can price hike, and we have a pricing power.
Yeah, so what happens is, whenever there is a price hike in the diamond industry, so we have no choice but to buy the diamonds, because we've already got orders. So with a 2 to 3 month lag period of time, we are all able to push the price hike to our customers / retailers. So for that 1 quarter, we will, if there is a significant price hike, we will have to take a small hit on our margins.
Sorry to interrupt. May I request Mr. Deepak Jindal to please rejoin the queue, as we have participants waiting for their turn.
Thanks, ma'am. Yeah, I'll wait in the queue.
Thank you.
Thank you.
Participants are requested to please limit their questions to 2 per participant. The next question is from the line of Pankaj Bhupesh Shah from the Nero Wealth. Please go ahead.
Hello. Good afternoon, team.
Hello.
Yeah. So, as you said that we are operating at 100% capacity in the LGD lab-grown diamonds So what are the plans on the CapEx side, and how quickly can we capitalize this opportunity?
Right. Thank you. Thank you. So we are looking at doing a capex of enhancing another 10 crores towards machinery over the next half year, perhaps. It is going to be step in step and hand in hand with our ability to distribute the enhanced production coming from the new machinery to our retail clients through jewelry. So we are focused on enhancing the margins for the overall company, and we're focused on margin-driven businesses at Goldiam, that being our core philosophy. That is why we are tying our capex to our visibility and our discussions with retailers regarding placing more and more large lab-created stones within their retail stores.
Okay. And my another question is on how do you see this shift happening from the natural diamond to the lab-grown diamond over a period of, say, next 3 to 5 years? And what market share can lab-grown diamonds enjoy?
So we are looking at, not taking anything away from natural diamond business. We are looking at enhancing lab-grown diamond jewelry to customers who never bought natural diamond jewelry in the past. What is happening currently is that we are converting people who bought Swarovski diamonds, cubic zirconia diamonds, silver jewelry, smaller different color stone jewelry to avenues of buying lab-grown diamond jewelry. These were the customers or consumers who never could afford to buy diamond jewelry in the past. So I assume by creating an entire new customer base, right, every retailer, right, is enjoying placing lab-grown diamonds in their jewelry showcases because it's getting more foot flow to the diamond areas, to the diamond department. So that's one thing. Natural diamond will always continue at the speed that it's currently continuing. Lab-grown will catch up, right, to that speed. So we are very hopeful. We are very hopeful that we are not taking one asset class of ours and reducing one and increasing the others. Our focus will be to increase both the asset classes. The only thing we will see is lab-grown increases faster.
Right. So you're saying that we are creating entirely different market for that is the lab-grown diamonds.
Yes, absolutely. Because the consumers that keep coming to buy lab-grown is not only somebody who bought a mined diamond jewelry in the past, but also a new entrant, a millennial, as well as somebody who has never had the resources in their family to buy diamond jewelry. Those are all the people who are now coming and becoming new customers for lab-grown diamond jewelry.
Great. Okay, thank you so much.
Most welcome.
Thank you. The next question is from the line of Ashish Shah from Business Match. Please go ahead.
Hello.
Yes, Ashish.
Hi. Good afternoon, Anmol and team. Thank you for taking my question. Your past historical financial shows that your EBITDA margins were dramatically lower from where we are currently and for FY21. So can you please help me understand what changed in our business model in this first half in the last financial year that our EBITDA margins have gone to 20% plus?
So Ashish, let's answer this question in multiple manners. So Goldiam's earlier operations were selling jewelry to wholesalers. So when we sold jewelry to wholesalers, say 5 to 7 years ago, right, where 100% of the exports of the company went to a wholesaler, which is like a middleman in America. So clearly we enjoyed different margins at that time. Then we started moving from wholesalers to retailers. Currently Goldiam sells 80% of our jewelry directly to retailers and only 20% is wholesalers. So their margins enhanced dramatically because of selling it to the last person out there before the consumer. So it's more of a B2B2C type of business we have moved to. Now, with the introduction of .com businesses, with the going to be introduction of Jewel Fleet, with the introduction of lab-grown, the margins have gone dramatically stronger for the company, and that is where the efforts of the company are, where we can grow our .com businesses, we can grow lab-grown businesses, we can grow natural diamond businesses straight to the retailer, where we hope to enjoy anywhere between 20 to 22% of EBITDA.
But just by eliminating the middle person through whom you are reaching the retailers, that actually gave you like a 10% bump up for that?
So a 10% bump up for that and introduction of smarter channels of sales, which is .com, which is buying raw material at a better price, reducing different diamond qualities as well, right? And concentrating on 2 to 3 diamond qualities gives us the additional strength to buy diamonds at a more cost-effective basis, right? And we were able to sell jewelry at a higher margin because of all these initiatives.
This 80% direct sales to retailer, would you share like what's your client concentration you would have with your end clients?
So yeah, we can get back to you, but our top 5 clients together constitute somewhere in the range of 55% of our sales.
Okay, and just a couple of more things. One is, Anmol, did I get it right that is it like a like-to-like comparison for natural diamond and LGD that the realizations are much higher for LGD? Is it like a like-to-like comparison where you mentioned at the start of the call it's $400 and $900? Did I get that right?
Like-to-like, can you explain what you mean by that?
In the sense, one was understanding that the lab-grown diamonds are much cheaper than the natural diamonds.
Right. So yeah, it's pretty like-to-like. It's the same sort of product segments being sold at the same retailer.
Okay, and you end up getting a much higher realization for LGDs, right?
Yes, that's because we are using larger centers, mainly because we have the ability to grow them in-house.
Okay. And any thoughts? I mean, and your this how do you approach are you approaching the same clients with your B2B website? Is it the same clients whom you're approaching?
So for the B2B website, we're approaching a wholly different segment of the industry, which is small mom and pop retailers.
Okay.
Currently, Goldiam is focused in the US in selling to large corporate retailers with a minimum store size of 40 to 60 stores. The B2B website is focused on selling to all those small mom and pop independent retailers with 1-2 stores that are spread across the country. About 40% of the US jewelry industry consists of these mom and pop independent retailers.
Okay. Okay, I think that's it. I'll come back in the queue, Amol. Thank you.
So, thank you so much.
Thank you. The next question is from the line of Gurjot Aluwalia from an individual investor. Please go ahead.
Hi, good afternoon, everyone, and thanks a lot for organizing this maiden Concall. So just a couple of questions. Firstly, on the industry size, right? What is the industry size for lab-grown diamond market? And what is driving this higher realizations of up to $990 per carat now? Because I understand it was only around $800 a year or so back. So about a 25% increase just a year and a half. So what is the industry size and what is driving this higher realizations?
Sure. So the industry size, the exact figures we can get back to you. We don't have them ready with us. So I believe they're around it's around $4 billion for lab-grown diamonds at retail. This is at retail prices. So, I can double check and get back to you.
What is the market that you're targeting or within which you are operating? The size of the market?
Right. So it's the same. The lab-grown diamond jewelry at retail, which is to our large retailers. Effectively counts the same market size. And then secondly, regarding your question of the realization coming from lab-created diamond jewelry, yes, the increase is thanks to further growth in the sizes of diamonds that we've been able to market to our retailers, as well as further growth in the type of jewelry that retailers are asking for us within lab-created diamonds, which tends to end up being some of the larger carated jewelry and the larger size jewelry, only because it's now coming at a much more affordable cost for them to then be able to sell to their end consumers. So as mimicking the comments from our chairman, it's coming at a price that's so well set up that even the end consumer who was not able to buy this product before had to buy large looks in CZ or other gemstones is now able to afford these larger looks and larger diamonds. And that's where we are also seeing a higher kick up in terms of our average realization from lab-created diamond jewelry.
Okay. And just related to this one, right, what is the per carat realization for a natural diamond? Because I'm trying to understand the price difference between the two and if they will catch up and then there's no scope for growth beyond that then, or much lower growth beyond that.
So per piece, our realization on natural diamond jewelry is about $450.
So this is already double the natural, the lab-grown diamond realization.
Yes, that's correct. On a per piece basis, on a per unit of jewelry exported basis.
Okay. All right, great. And then secondly, I just want to understand if you want to share any guidance on the growth rate for the company over the next 3 to 5 years, or the overall vision that you have on where do you see this heading. I know there's a lot of scope for growth for lab-grown diamond jewelry, and it's just sort of in the initial phases. But if there is any sort of vision for the next 3 to 5 years, how this business will look like.
So I think the company is going to fare pretty much positive and well in the few years to come. Company will look at inorganic ways of growing. We will be looking at an acquisition in the United States of America, which is our largest market, to further enhance our distribution. Right. Currently, efforts that company will put in very shortly, and you will hear them also, is the efforts in distribution and inorganically getting some kind of a retail push directly for our products in America. We are also looking at the same time to see if we can acquire a business, manufacturing business in our own country, where they are already supplying but different type of product being manufactured and supplied to different customers in America as well as in India. So we are very positive in number one, growing lab-grown diamonds, introducing further capex into lab-grown diamonds and adding on the machinery and capacity expansions for it. Using the same diamonds that we grow, putting it into jewelry and exporting the same. That's where the maximum value addition or margin expansions will happen for the company. Growing the natural diamond jewelry business right to the best of our capability, and as well as with inorganic ways of expansion. I think the company is poised on a strong footage.
Sorry to interrupt. May I request Mr. Ahluwalia to please rejoin the queue? We have participants waiting for their turn.
Okay, thank you.
Thank you.
Thank you.
The next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
Yeah, thank you for the opportunity again. My next question is on the Jewel Fleet website. If you can update us in terms of number of orders we are getting and what kind of traction are we seeing there?
Right, sure, man. So we are getting about 10 to 15 orders on a weekly basis right now, and we've just set up our distribution set with a US wholesaler who's got boots on the ground. We expect moving forward that over the next few quarters there'll be more traction and more numbers to share with the public and with analysts on call. So yeah, I hope that answers the main question.
Yeah, sure. And the second question is in terms of churning and scaling of our customers, which you have talked about, the top 5 customers. If you can talk about, without actually naming whichever is comfortable to you, okay, how these customers have scaled for us, and normally these 5 customers, were these the top customer last year or 2 years before also? If you can talk about the same.
Sure. So, I'll give you a brief without giving too much information on the public call. We're happy to have a one-on-one at a later time. But effectively, all our top 5 customers have been with us for nearly 6 to 8 years now. Repeat orders have been very encouraging, and year-on-year growth has constantly been there with, of course, investment from Goldiam side as well, in inventory at their stores to further boost and test new items consistently. Or another factor is, with all 5 retailers, we have effectively established, all 5 of our top retailers, we've established a strong presence on their websites as well.
Sure. One small clarification. So when you talk about the lab-grown diamonds replacing, say, Swarovski and other kind of jewelry, but the realization you are talking about as of $1,000 for us, so at retailer the cost will be even higher. So I'm not able to correlate the data because my understanding is Swarovski and all those average selling price would be cheaper than this number.
So, Aman, I think it's very simple. With lab-grown diamond jewelry, we have 2 types of products. One is an offering that we grow ourselves, right? And what we grow ourselves are all 1 carat and 2 carat diamonds, and that is one offering that we provide. So the price was informed to you is for our own offering, which is $950, which is a blended $950 per individual realization. Then we are also buying these smaller diamonds from Stars and Melee in the market, which come from China, which the rough comes from China. It is more termed as HPHT lab-grown diamonds. Those are the products where we do fashion jewelry and smaller bridal jewelry, where the pricing is different for a Swarovski type of a customer to come and buy. So if you're really looking at apples to apples, right, then on an average, those are all $200, $250 product, and a blended average is where we are currently is at $900, $950 with using our 2 carat diamonds.
Oh, yeah, that makes sense. Yeah, thank you for the clarity.
Thank you.
Thank you. The next question is from the line of Deep, an individual investor. Please go ahead.
Hello. Thank you for the opportunity. Am I audible, sir?
Yes.
Okay. Thank you. I had quite a few questions. I'll voice out 2 questions. One regarding the longer term vision. This was already addressed in part by Mr. Ahluwalia's question, and I just wanted to see that in the longer term, as we mentioned, that we're also looking to grow inorganically in US and to increase our distribution. Are we also exploring markets beyond jewelry for lab-grown diamonds, like for industrial uses or basically anything beyond what we are currently into, or do we think the jewelry itself will give us sustained good enough growth rate for at least next 3 to 5 years?
So yes, for the next 3 to 5 years, we're very satisfied to focus on, the segment we know best, which is jewelry applications for lab-grown diamonds.
Okay, great. Thank you. And one other question I had was in terms of corporate governance. As a new shareholder with Goldiam, my initial confidence came in from Mr. Ramesh Damani's investment in Goldiam, and but we would love to hear from management about their views on corporate governance and the thoughts that they provide, because we have read a lot on the internet about Goldiam being a very shareholder-oriented company and in terms of buybacks and regular dividends and so on. But generally, what's the thought process that the management has in terms of corporate governance, and how do you ensure that the level of corporate governance is maintained in the longer run beyond the current time frame?
Well, you see, we are a very compliant company in terms of all the laws and the rules that are, that we are under and working with. We have a good and a very diversified board of directors. All these board of directors ensure, as well as our auditors, CFO, audit committees, we all ensure that we are very compliant, whether it is payment of wages, payment of dividends, payment of anything. Everything happens on time, and it is well taken care of. We are also, so we are technically very compliant. So really, I don't know how to answer that in a better way.
Adding on to that, sir, the company, we've always chosen to be very forthcoming, especially in the industry that we're in. So we choose to be very open with our shareholders and investors and host things such as this earnings call and analyst call, so that we are able to talk with shareholders and discuss our strategies. Of course, the board of directors, as mentioned, is independent, and that also gives us further direction along with the guidance we receive from large shareholders who have supported us in our journey so far. We see this as a source of strength for us that we're able to be focused on corporate governance, be clean and clear with our financials. Most importantly, stemming from the fact that we are net debt free and are constantly giving back dividends and buybacks to reward shareholders and increase value creation over the medium and long term. And then finally, this is an area of strength even to our customers who look at Goldiam very favorably because of all these factors that differentiate us from our competitors.
Great. Thank you so much. Thanks for the opportunity. Thanks for arranging this investor call. I hope that even if not at a regular quarterly cadence, and at some regular cadence, we get to speak with the management. Thanks once again.
Absolutely. Thank you very much.
Thank you. The next question is from the line of Amit Shah, an individual investor. Please go ahead.
Yeah. Hi, good afternoon all. From what I hear is you have sort of two verticals in CVD jewelry. One is where you manufacture and sell it, and another is where you need to procure from the market, sell it in the jewelry and sell that. So what would be a difference in the margin between the two verticals? And second question is you're looking at 10 crore capex for growing CVD business. Okay, what kind of incremental growth will come from the 10 crore investment in terms of production numbers or in terms of numbers basically?
Sure. Thank you so much for the questions. So for lab-grown jewelry, where we are sourcing the raw material from the open market and making jewelry out of it, our EBITDA margins are near about 30%. And for lab-grown jewelry, where we use our own grown and manufactured CVD center stones and then distribute that jewelry product to our retailers, our EBITDA margins there are near 35 to 40%. So it's a very significant delta, and that is even more compounded because of the products that we sell with our own grown jewelry centers is at a much higher overall value per unit sold. And then, sorry, could you repeat your second question, please?
The second question is
CapEx.
Yeah, you are looking at 10 crores of capex. Right. Okay, so that would reflect into what number of produced products? Right. Because since you're saying that there are higher margin in the goods what you produce naturally, so what kind of numbers we are looking at?
Right. So that would yield to an additional annual revenue of about 10 to 15 crores coming from lab-grown diamonds. And that would effectively give us a further EBITDA boost in the range of 5 to 7 crores on a consolidated basis, depending on when we start the expansion.
So the asset turnover ratio is basically 1 to 1.5 in this particular kind of product.
That's correct.
Thank you very much for taking my question.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that everyone gets an opportunity to speak with the management, please limit your question to one per participant. The next question is from the line of Gurjot Aluwalia from an individual investor. Please go ahead.
Yeah, thanks for the opportunity again. Just one question on the order book visibility, right? So you've stated in your Q2 results that the current order book stands at about 200 crores. And I think you recently got another 50 crore order. So I can think about like 250 crores worth of order book that's currently visible for H2. In H1, we've already done 330 crores, right? So I'm just trying to understand going forward, how does the way in which the revenues of the company grow? Is that highly correlated with the order book the company has, or as we do a lot of B2C kind of business, the relationship with the order book and the revenue growth will probably reduce significantly, and so we'll not have these very high or high volume orders because the order book for H2 is lower than H1 revenue already done.
So the order book currently that we are having, and we're coming to the largest quarter, or the best quarter in terms of margin and business expansions of the company. We already have an order book of 250 crores, plus over and above that, we are currently doing close to 100 different units a day in .com, which is not even part of the order book or not even disclosed. So when you're looking at all that, I think the company will have a very strong quarter. And the correlation between order book and .com will continue and run parallel. But unfortunately, in .com, we are not able to predict the value of what is being sold until it is sold or until the orders are received. So we only talk about the order book, which is the larger order format of the larger retailers and larger wholesalers. When we get these 20% of our businesses comes to .com, so it's very clear. So if you're looking at a 250 crore order book and 20% of that comes from .com, it should tell you more or less where the order book is headed for that quarter.
Okay, got it. Thanks a lot for answering the questions, and all the best for the future.
Thank you. The next question is from the line of Deepak Jindal, an individual investor. Please go ahead.
Yeah. So my another question is, when we are focusing on US market for let's say midterm, are there any synergies where we can kind of expand to some other potential exporting markets as well, let's say UK and Europe?
Sure. So definitely UK and Australia are markets that are of importance for us also. They are, of course, much smaller markets in the overall jewelry industry. So we're looking at those, but we believe we have enough of a runway of growth available for us moving forward from the short to medium point of view, 1 to 3 years, by being focused on the US at the moment.
Okay. Thanks, sir. Yeah, this is it. Yeah.
Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Deep, an individual investor. Please go ahead.
Thank you for the opportunity once again. I wanted to ask about the planned capex that we are talking about. Recently, Mr. Colin Shah, GJEPC chairman, mentioned that there is very high demand which is boosting the jewelry and diamond exports, especially to US and other developed nations. Now, especially given this increased demand scenario, do we pursue that this level of demand will continue to happen because of which we are doing capex, or do we think that irrespective of the demand in US, our .com anyways will support the capex that we are trying to do further? Like, what are the plans? What is the vision which is helping us decide to do this further capex?
Very nice question. Very good question. Thank you for this. I think it is, besides whatever happens in terms of the generalized exports out of India, Goldiam is very, very, very confident of using our own diamonds into our own jewelry and exporting that. So I think with our capex, we will be able to sell the production that comes from that capex into our jewelry, into the profitable margin that we currently are selling very comfortably. So that is the only reason why we would be doing capex, not because the industry grows at a certain percentage in loose diamonds, right? But we are very confident in using our diamond in that capex that we grow into our own jewelry and exporting it.
Great. Okay. And one last question on the supply chain constraints. We hear a lot about this limited availability of supply chain infrastructure, especially given the ongoing choking of the whole infrastructure in US. Do these affect us in any manner, or are we completely out of the whole of this shipping, container, and infrastructure supply chain issues, and this doesn't affect us at all?
We're out of that entire supply chain issues because Goldiam's products gets exported in a small box and in British Airways or Lufthansa or by air freight. So, whatever we ship on Monday is in our hands with the customer on Wednesday. So we really don't have those shipping containers and any of those issues that have our products being exported in.
Great. Okay. Thank you. Thanks so much.
Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to Mr. Rashesh Bhansali for closing comments.
Thank you everyone for joining us on this phone call. Goldiam has been receiving positive responses and feedback from its customers for both natural and lab-grown diamond jewelry businesses. The company is surpassing the industry's growth by riding on the outperformance and repeat orders of successful styles in the US retail market. Goldiam looks forward for a strong Q3 FY22, which happens to be one of the key quarters of the company, coinciding with Thanksgiving Day and Christmas festive sales in the United States of America. I wish you all a great evening. If you have any further queries, please reach to our investor relations team. We will be delighted to satisfactorily respond to all your queries. Thank you all very much. Stay safe and stay healthy, and good evening.
Thank you. On behalf of Goldiam International Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.